What is going on?
Hey, Jack, what's going on, my man?
How are you?
I'm good as always.
I know. Hey, so did you get anything for Christmas other than dirty books?
I got a fever.
Oh man,
Whatever, whatever this crap is I got going on here.
did you? I mean, like, did you get like Legos or a rocket or ship or?
Got a few, got a few bottles of some high octane drinkage.
There you go. All
What's
right.
up,
Now,
guys?
is that local or how does that work over there?
I mean, this is just stuff from the store. People
Oh,
buy something that I think I might like, and
cool.
so got some spices for making more barbecue, and
There you go. And
so.
Blake, were you good? Did Santa Claus come and visit you?
Man, Santa Claus came. He visited. He came to my house, came to my parents' house. I mean, it was I mean, this man dropping through chimneys. I tell you what,
Santa got a bag.
he's got a bag and he was dropping them off everywhere.
This is
But
this is
yes,
probably like this is probably your last Christmas without having a little one, right?
it 1000% is. Me and the wife were just talking about that. It's like next year, we're going to wake up on Christmas Day. We're going to have a 9-month-old baby,
That's going to be awesome. That's the
isn't
best
it?
part about Christmas by far.
That's exactly. And now Santa hit me up and I got a direct line to him now. So I can just text him and I'm good to go.
All right, on. Right on. Yeah, it's a good time.
So,
It's a
well, I'm going to let you guys take it from here. Jeffrey, if you want to request permission to share the screen, I'm
all right,
finishing
man.
up Chris back here. He's going on a waterfall income and we're just knocking the
All right,
cover off the ball. So,
all right, man. There we go. There we go. And I guess we should start where we start here. All trading involves a substantial risk of loss, and past performance is not necessarily indicative of future results. This presentation with Jack and I is intended to be informational, educational, fun, entertaining, not a recommendation to be buying or selling any financial instrument, including stocks, options, bonds, forex, futures, cryptos, treasuries, bonds. If you trade those things, you might lose money. Jack and I, we're a couple dudes that make some money in the market. Maybe hanging out with us, you can learn a thing or two on how to, improve your financial well-being. But if you need somebody to tell you what to do, if you're just not up for doing it yourself, there's people you can hire and consult. But that's not us. We're not telling you what to do. We're just sharing what we do. Isn't that right, Jack?
That is exactly right. We're
Seems that we
just
have
sharing what we're doing.
seems that we just kind of topped out here in the market right here. Just
And Santa Claus might have come for you and Blake, but he's not going to rally the market.
yeah, brought you a busted leg.
That he did. But it gives me a lot of good time to reflect on things now that I can't get around for a couple weeks. You know, good time to reflect and plan for 2026. 2026 is going to be maybe the best. Uh, it's just shaping up, even if nothing really happens in the market, just the amount and quality of the IPOs that are going to come in 26 going to make it a bonanza for traders.
Yeah, I'm just I'm not so sure that everything's hunky dory though. Like sitting here at the top, we were sitting here at the top, but coming into 2022, and it started out rocky. See, we definitely ought to keep a you know optimistic look, but you gotta check your back. I mean, we can't just ignore and just keep thinking we're going higher. The last time we had three 20+% gain years in a row, that was the dot-com bust. And right now we're sitting here looking at the same sort of thing. And we could have another sizable type pullback. So we've been running it hot, and there's risks when you run it hot. Just I'm not saying that anything has to happen, just we should be cautious.
Very. Yeah, I still would totally expect a little bit of a rug pull going into January, but I really thought this market would try to get a little bit stronger before now. It's too late now for any kind of Santa Claus rally. That would just be a normal little bump. So no,
We
no,
basically
no
got one
Sand
day
Rally.
left. We got one day left after today
Yeah.
in
No,
2025.
a rally
And
would take it would take 5 days, 3 to 5 days or more, but it's not in the cards.
I mean, I think this was the Santa rally right there. That was it. That's what we got this year.
A lump of coal is what that looks like.
That
But
was it. I mean, we pulled back and then rallied right back up, and that was it.
mhm, mhm.
So I've just kind of been chilling out a little bit. I've eased up trading a little bit this week. Quite honestly, it's just we talked about this all the way back in November that historically Thanksgiving week, Christmas week, New Year's week, kind of thin on the trading opportunities. Is it doesn't mean that there's no opportunity, just a little bit thin. You got to be more cautious, more opportunity to lose money or just not make money on directional trades.
Mhm.
So
It's
I've
been
just
a
been riding it real easy.
Yep, me too. I try to do a bunch of credit spreads on Tuesdays for Friday's expiration, but with one closed day in there, they suck out so much premium. I'm getting half of what I could normally get. It's bizarre. They actually like they took out a little more premium, more than just one days because it's tough to get anything in that 5, 7, 8% range.
Well, part of the story here is that VIX is sitting at the lowest level we've been at in over a year. So
That shouldn't be the case either. Right now, it should be much higher going into the new year.
yeah, we're
So
sitting.
that's why I'm not getting any option premium either right there this week, for this week anyway.
Yeah, I mean, this to me, this is a risk. Like anytime we're down here at the lows, that usually preempts some sort of
Totally.
spike.
Totally.
And when we get a spike, that's usually a pullback in the market, typically. We're not going to go a long time without one. And
Hmm.
that's just, we can have a prolonged period, but then the correction we get is worse. You can see we usually hum along 3, 4 months and then spike. 2, 3 months, spike. Month or so, spike. So now we're sitting here. It's been Thanksgiving week, really, since we got the last scare in the market. We've been drifting down, drifting down, drifting down on VIX. We've kind of pushed it down to, think about it. Like, is now less risky than any time since last December? I mean, you could answer it for yourself, yes or no. I mean, if you agree with the market, then then it's priced appropriately. But if you think now there's things going on that seem like they could be riskier for the market than any time we've had since last December, then this is probably low, and maybe you should buy a little bit of protection. And I did jump in here and buy a little bit of VIX, not a lot, just a contract or two out to March. And you jump out to March, you jump in here, and you can roll up in here. And I usually shop right around $1, maybe somewhere in the 30 area, and buy one. That gets you 77 days right now. If you wanted longer time frame, you'd have to fly out to April to get 105 days, cover at least 3 months. Because we're right, Friday we're in January. So if you wanted to cover 3 months, you're gonna have to fly out to April at this point.
Yeah, it's nuts. I had to go out to the ninth on a lot of this stuff because there wasn't much for the second.
So if you're trying to cover yourself for, some sort of market chaos potentially coming early in the year, and seasonality wise, we were talking about that yesterday a little bit. That usually we do start out the year with a little bit of rockiness.
The way you trade this, it doesn't matter, right?
Yeah, it doesn't matter.
Your strategy is not predicated on a bull market. And folks, you really need to take that to heart because that's why he's got the success rate he does, and he's got the growth curve to prove it in such a beautiful chart on his own growth curve. But that's a good thing where I'm not in that position. I have a high tech portfolio that is up quite a bit, and I need to protect the profits in there, which means I'll probably have to buy some puts, some married puts, to protect that gain I have. But look at that. You got two real big jumps in there from stock price appreciation, and the rest of it is just from grinding. But
Yeah,
that's a growth curve extraordinaire.
and it's just, my goal is just to book a little bit of profit every day. And
Doing it.
that's what happens. Like this is it really starts adding up. You can see these numbers over here. This is not chump change. And this is not like $1 million account or anything like that. It really started out as a $75,000 account back here in April.
Let me tell you though, brother, it's going to be harder to do that with 1,600,000 than it is.
That's what you say, but there's still I'm just fishing around the low end of the pool here.
I'm
Uh
telling you, it's going
I
to be
can
harder. It's
I
going to
can
be
go up to
way harder.
everybody says that, but I keep getting a little bigger and a little bigger, and I don't seem to have this problem. But yeah,
You won't now, but you will then getting fills, just deploying it all, is the other thing. When I had my fund, we did not want anymore. I had one main dude, and he had his own fund, right? So he invests in another fund with his money, and then he helped bankroll a lot of it. And too much dough to deploy can be a real hassle. Getting fills, getting in, uh, allocating how many positions you're going to need for that. 30 positions. I mean, it's a lot of work.
I sit here, I look forward to having that problem because right now I'm sitting here playing size of one on some of these with I've got a hundred and it's like $130,000 account roughly, so we're talking about 10 times bigger. I don't necessarily think playing 10 contracts at Nike would be a problem.
No,
So yeah, I foresee the problem really coming in when I'm maybe up in the $5 million account size if I got to that size. Um, deploying that much capital. I don't. Um, I think I can manage this size, up to $2 million pretty easily and keep doing what I'm doing. But size may come into play. I don't know.
I
Um,
hope I'm here when I hope we're still doing this show and you hit 2 million.
yeah, I have a
Love to
goal.
see it then.
I have
Yeah.
a goal to be trading 30 million, but I'm long story short, I guess. I went fishing one day with a guy, and our so we were gonna go. We booked a offshore fishing trip down in South
Cool.
Carolina, and the boat broke. A drunk came into the marina and smashed into the side of the boat we were supposed to take and poked a hole in it, and that kind of put the kibosh on our fishing trip. And the captain called us down to the marina. We went down there, and he was talking to us. He's like, I got a buddy. He doesn't do charter fishing. He goes fishing. He's like, he hires me to be the captain, and we go out and I run the boat, and he fishes. He's like, he might be willing to take y'all out. And I was like, okay. So the next day, this guy wanted us to come down to his boat and to meet us. He didn't want to take a bunch of drunks out fishing or whatever. I guess a lot of people go deep sea fishing. They, get liquored up and whatever. My family, when we go fishing, we go fishing. And so he met us and we talked a minute, and he like, you guys, you guys are fisher. You guys go fishing. He's like, all right, we'll go tomorrow, or whatever it was, a day or two later. And so he took us out, and turned out he had made between 30 and $40 million on one big trade. He had worked in Chicago for years, and got himself into this position where one big trade could retire him, and he retired out and went down there, bought a house in South Carolina, bought a boat, and just went competition fishing. And he would take his boat from right there in South Carolina, drive down and fish the competitions in Cancun, Mexico.
Wow.
And so he was an interesting dude. We talked all day, and he said, somewhere around that 30-40 million dollars, he's like, you can live the rest of your life just doing fun stuff. So
Hmm.
ever since then, I've had my mind, that's the point where I want to get to.
Yeah.
And
8 figures is where it's at. Being 7 figures, that's nothing, right?
Yeah. So I just, that's kind of like been in my back of my mind for a long time that somewhere around that 30, $40 million, if I ever hit that, I'm probably good.
So on this story, was this a guy, did he go all in on one trade? Did he have such a high conviction he pushed all the chips in, or
Yeah, he
how did
didn't
he
want to
set
talk
that
about
up?
the trade. He didn't want to talk about it, but he said he saved his own money and he was trading the firm's money, and he pushed all his chips into this one trade, walked away with 30 something million
So if
dollars.
you don't want to talk about it, it's illegal inside information. Come on, man. Dog, please.
Yeah, he didn't want to talk about the particulars of the trade. So, obviously he did something that he didn't want to talk about. But
Well, I'm always fascinated by guys that go all in on a trade or push most of their chips in. Or who was it that said that the go for the jugular? I don't know if that was Paul Tudor Jones or one of these guys talking about when you find that one high conviction trade, you almost have to do it if you ever want to break out of where you are economically, financially, to be able to go all in, and time he did that. And I always love hearing those stories because I maybe have only done it one time and or a couple times back in the day, but only one time recently. And I'm always fascinated to hear what conviction did a person have to make them like push all the chips in, right? Because the winning side's great, but what if he lost all that? He'd be back in the game for another 20 years, right?
yeah, I mean, he wasn't a young guy either. So, he had been in the game for a while, and he basically told me he didn't trade anymore. That was it. He hung his
Wow.
hat up,
Wow.
and
That's a whole nother deal. Yeah.
yeah, that was it. Like that was his retirement trade. He was
Wow.
done,
Wow.
and so
That's amazing. So yeah, that he definitely did an illegal trade and he can't bring his guilt to consciousness, right? So he
uh,
he front ran some good
yeah,
information.
this guy was a Russian, so he was his name was like Azdamov or something. I don't know. I couldn't pronounce it,
Even
but
more, even more.
but he worked for one of the firms there in Chicago, probably doing futures or something like that, and
Mhm.
just
And he got the crop report on the orange juice, right?
something like that. So he made it big, and he was done. He wasn't gonna do
Yeah,
anymore. So
yeah, yeah.
and yeah, he did good. So anyway, to me that was a guy that you know I looked up to, that I met one day, went fishing with him, and he invited us to come competition fishing with him down in Cancun. Um, but we haven't ever taken him up on that offer. So
Cool. Yeah,
interesting guy.
take him up. Tell him to bring that boat down when we're in Florida. Maybe we can go do a little offshore.
Maybe. Yeah, he's on the up there on the East Coast. So we'll see.
Nice.
Anyway, so it's interesting the people you meet if you just keep an open mind.
Oh
And
man, it really is. Yeah. Yeah. I'm always fascinated listening to what other guys do when they're doing it big, right? And it's working. I love that.
yeah, so anyway, set your mind to something. And to me, I set my mind on a goal to make $50,000 a month reliably. You can see that the 1 year profit right here said if I did crack 50,000 in the last almost 9 months. But when you look at the 1 month, it's only 13. My goal is to make 50K a month repeatably. So this has still
Yeah.
got ways to go.
Now, how many of you here are new to the show? And
Yeah, if
maybe
you're brand
we'll,
new to the
we'll,
show,
we'll
let us
touch
know.
on we'll touch on the strategy that he's using and I'm copying and why we're doing it. But if you guys, anybody's new and you want us to go over it, um, we'll give you a brief overview. But otherwise, you're new, Marcia. Okay.
So
Newbie Jeff,
I
Patricia.
have different ways I trade for different accounts. In this account, I want to reliably produce income, and I have certain strategies that I look at that reliably produce income.
Now
And I
there's
have other,
one core concept to this whole thing, one umbrella. What would you call that?
well, I mean, book and profit is my
Yeah.
core concept, really.
Yeah.
Um, I lean heavily on one particular tactic, I guess you might say, and that's the wheel. Selling premium is kind of
All
the,
right.
selling premium. And the wheel is kind of like the most, I guess, capital intensive way to
Yes.
put selling premium to work.
Everybody write that down. The wheel. All
Now,
right, Bubby. Now take us through. Let's say we want to start a wheel trade today. What's the principles and concepts?
yeah, so for those that don't know the wheel, you've never Googled the wheel, you don't know anything about the wheel, there's a lot of different opinions about what the wheel is, and but it comes down to a few core, uh, kind of core, I don't know what you would call it, steps. I guess we'll call it steps.
Okay.
And
To
let
do
me
the
pull,
wheel. To
yeah,
do the wheel.
to do the wheel, just a few steps, and it's kind of like a choose your own adventure type of thing. There's no set way. Now, lots of people will tell you there's a set way, like this is the way you do it. There's lots of people that tell you that, but I've been all over the place. I've traded with lots of different people. In fact, I've done this trade on a ticker for 18 years. It was probably the best trade of my life. It had nothing to do with COVID. And, Jack and I, we've talked about it here on the show. So it kind of goes like this. It's relatively easy, 4 steps, but it does have multiple choice, multiple guess, however you want to say it, steps. It's quite easy when you break it down to the most core component. You have to find a stock that you want to own shares on. All right, this is key. You have to want to own shares, and you find that stock that you wanted to own shares on. If you have no stocks you want to own shares on, this is not the thing for you. All right. If Jack and I are talking about doing something like this on Tesla, and you're like, I'm not trading Tesla, don't do this trade on Tesla, period, or anything related to it. It's very much you have to want to own the shares. So you find a put on something that you want to own shares on. I like to shop in a place that gives me a really good deal. Jack and I differ here slightly already on step one. We come into alignment quite a bit, but sometimes we differ on this step one. Jack likes to get put shares a little more aggressively. I like to get a really good deal. And so
Let's walk them through one we could do. I'm probably going to do one here on TSLL for the
yeah,
ninth. So let's just show them how it goes.
yeah, 1 second. Let me pop up a trading platform. Jump it over here.
So step one, we're going to sell a put, a cash secured put on a stock we want to own. So if the put is $19, $19 strike, we're going to need 1900 in our account to cash secure that if we get the stock put to us. But
Yeah,
when
so
we sell this put, we're going to get paid. How much are we going to get paid?
right here, it's roughly $58
So we
per
would lower
contract.
that, we'd subtract that from our cost basis if we got the stock put to us at 19. Our cost would be 19 minus 56. But the main thing about this first step on the wheel is that we're creating cash flow with our cash by using a stock and its option.
Yeah, so we're going to take
So far?
$1,900 of our money, and we're going to get paid to commit that to buying 100 shares of TSLL at 19. We're going to get paid today $58, and minus commissions, $56 in this account, which means instead of $1,900, it actually only takes $1,843 to do this trade. Now, for people that are new to this and you're sitting there going, well, that's a really small amount of money for how much money it's going to take to do the trade. And let's just work through this really quickly. All right.
Here's where the magic happens, people.
$58 divided by that 1843. That's 3% return. All right. You're like, whoo, that's, I could trade an option and get 20%. Hold on a minute. 10 days. Let's divide by 10 days. So that's 0.3% per day. And then if we do this on a trade that lasted all year, that's 114% return for the year. Well, that's not sounding so bad now. Like if you could if you can make 114% return on your account in a year, you're doing pretty dang good. How many people? Let us know in the chat if you did better than 114% this year.
Yeah. And how would you make 114% without requiring the stock to go up 114%? See,
Yeah,
that to me, that's the other piece of the magic. You don't have to pick a stock that's going to go up 114% to make 114%.
Yeah, we didn't say the wheel is new. This has been around a long time. The way this works.
All right. So now we sold the 19. Let's go back to our steps.
Now, so we've sold that 19. We'll just pretend like we got it filled. Now, step 2, rock along closer to the expiration date. You can either close the put at profit. You can let it expire worthless at a profit. Yeah, that's kind of 2A right here. If that happens, you go back to step 1, and that's a wheel. Like that's a circle right there already. Now, 2B, let's say price dropped. It's, TSLL is below 19. All right. You don't close the put, and you can take assignment if it's in the money. That doesn't always happen, though, if it's in the money. Sometimes it expires worthless, even if it's in the money. That happens a lot on IBIT. That's the Bitcoin ETF. You can be in the money and not get put shares. It's crazy.
Weird.
Now, if you don't get put, you go back to step 1 again. If you do get put, you move on down. Step 3. Couple choices here. You can sell the shares immediately on Monday after you come back in, after you got put on Friday. You can sell it above the strike price you were put, book profit on the whole trade, and back to step 1. Now, if you sell the shares below the strike price you were put, you want to keep it above your cost basis. Now, jumping back over to here, $18.43 is our cost basis per share if we got put at 19. Anything below $18.43, you're taking a loss on the trade and you're doing it wrong. All right, the way you do the trade wrong is you give up and you book a loss. Now, Jack and I agree on this point. As long as you keep working it, you can work the wheel indefinitely until the stock gets delisted, quits trading, gets bought out, or you book a loss.
Because you're still going to create cash flow is the thing, right? You're going to use that stock as an asset to create cash flow. So that's going to wiggle around up and down, but you don't want to stop. That's the number one way to ruin the wheel is it'll go flat if you stop. You got to keep it rolling. So just don't stop. So our next choice here, it depends if we get it at 19, if we want to sell it at 19 and just keep that $58, or if we want to sell a call, take it and sell a call against it, keep cash flowing it.
Yeah, so the next step here, click the wrong button. We can sell a call. We've got the shares. We can sell a call at or above the strike price we were originally put, or at a minimum above your cost basis. Now, Jack and I do differ just a little bit here. I like to keep this kind of rule as my base rule. Now, there are circumstances where you might need to sell a call below your cost basis if prices really dropped against you and you're trying to generate some premium, but you got to be very vigilant on it, because anytime you sell a call, you're agreeing to sell your shares for that price at any time. And I've even been called out of stuff where the call was out of the money. People say that's impossible. It can't happen. But in all the years I've been doing this, I have had something called out with a call that was out of the money. I guess somebody was so sure it was going to pop, or maybe they were so short the shares or whatever. They needed the shares more than they needed the premium. So they executed it out of the money. It was the craziest freaking thing. I still can't believe it. I don't have the record to show you, but it did happen to me more than once. So it's just wild. If you do this long enough, you'll see all sorts of stuff. It's kind of like having the put in the money and not getting put the shares. It's just the craziest thing. So if you sell a call, you're agreeing to sell those shares. And if you're below your cost basis, you're in a position where you can guarantee your loss, because the only way you lose money is if you close the trade below your cost basis. Now, when we sell that call, we bring in more premium. That reduces our cost basis. And we move on to step 4, where you can either close the call for profit or let it expire worthless. And then we kind of wheel it right here, repeating this until we get called out. Now, some people stay in this zone indefinitely. I stayed in this zone for 18 years on
one stock.
on one stock.
You got to be clear that it was one stock. You
That was
weren't
one
just
stock that I
stuck
did.
in limbo.
I never rebought. I had my same 100 shares for 18 years. I bought those shares for $5.50. When that stock got bought out at $190 a share, my account was worth $26,000. I'd never put another chunk of money in. The difference between the $19,000 that they paid me for the shares and the $26,000 that the account was worth, that's $7,000 of premium that I collected selling calls for 18 years on 100 shares.
And we call that the red hat treatment.
All right,
So that
that
just
stock
goes
was
to
red hat.
prove, yeah, if 18 years. So it really doesn't matter if the stock goes up or down. You're not really banking on the stock to go up. It should be in a good trend, I believe, but you're really just using it to create cash flow all the time, all the time.
$26,000 was the value of the account. Like, I never put more money in. I never traded any other stock. I traded that one stock for 18 years in that
500,
account.
$550 original, right?
All I ever put in was like a $600 initial IRA contribution. This was an IRA, and it was worth $26,000, that account, when it got bought out by IBM, when that stock got bought out.
Yep.
So $7,000 in premium I collected, and 19,000 of it was the stock value when they bought it out on the buyout deal. The other $7,000 that the account had appreciated was all premium I collected along the way. And why didn't I use that premium to buy something else? I just didn't. I used that premium to offset if I needed to buy the call back or something along the way. So that's how I did it.
Love that story. And this is the money making strategy out there right now. I think selling premium it's changed everything about what I do. And there's a lot of different ways to do it. Credit spreads, cash secured puts, all kind of different ways. Yeah, very well done, Jeffrey. That was a great overview of the wheel.
Now, you can, if you get them called away, you just run back to step 1 right there. That's the last kind of piece. You get called away. There's plenty of times that happens to me. I let Nike get called away last week, and I'm back to step 1 again, trying to find something to sell shares on, or sell puts on. Now, this bottom sentence, I think it's important. Lots of opinions on the right way to do the wheel. I have my version of it that I call the turbo wheel, and it relies a lot on picking direction of price and finding things that I think are going to be bullish. Most wheel traders are kind of direction agnostic, like Jack's been talking about. Like, you don't really care if it goes up or down or sideways. You just want to generate the cash flow. I tend to go after a little more bullish positions and be a little more aggressive on catching stuff that goes up. But I always want to get a great deal. I don't ever want to get a bad deal on my stock. At least I try not to. I mean, sometimes it's inevitable. Price goes against you. You got it wrong. But I have a habit of being right more often than not on picking direction. I spent a lot of years learning how to do it, and I can teach other people how to do it. But it does take practice, patience, and discipline. So that's the wheel in a nutshell. Like I said, there's lots of ways. And I see lots of questions about how do you find the stock? How do you pick the stock? This, that, and the other. There's a lot of, there's sauce that goes into it, and you learn tricks along the way. I didn't get lucky on the first pick. My red hat stock was just one that I guess you could say I got lucky as, an 18-year pick that lasted forever and, made me quite a bit of money because 550 or, $600 turning into $26,000 is, that's a pretty crazy appreciation, but it took 18 years. It wasn't like this happened in a week. So, patience, discipline, and personal accountability. Like I owned every decision. There was nobody I was following. Nobody told me what stock to buy. It was all my decisions all the way through. So Jack and I sit here and we talk about opportunities on the wheel every single day. There's some tools that we've bought from other people that make this handy and helpful and use, cut out some of the work. But we have a few favorites too, like TSLO is a favorite. Jack has a rule that he likes to go after stuff that has a beta bigger than 1. What's a beta, Jack?
Beta is a measurement of volatility. The broad market has a beta measurement of 1. Any individual stock with a beta over 1 is more volatile than the broad market. And the reason I want to have that is because I'm going to get a better price on the options. The more volatile a stock is, the juicier, the higher the premium you're going to be able to collect.
Now, there's some other nuance to this too, is that not all expirations have the same implied volatility. And on TradingView here, which is a handy dandy free platform anybody can go get on and you don't even have to pay any money to use it, you can look at this IV structure right here, and it shows you which options on that particular ticker are paying more money. The higher up here on the curve you are, the higher those options are paying. Now, there is a kind of trade-off. Like, I don't necessarily want to tie out my money for a year on TSLO, even though that's kind of where you get paid some of the most money, 9 months out. I'd rather be tying my money up for a week or two. That way I can make more decisions more readily. And the numbers here aren't that crazy. 80% to 100%, not that crazy. Now, some of these we see, it'll be like 150% and down at 60%. And that gets to be like a whole different ball of wax as far as, getting paid 160% versus getting paid like 60%. And this right here, it's depressed right now and inverted from what it has been for the last 3 months. Mostly all due to this end of the year, just lackluster market we've got going on for the next week or so.
But this one has a couple of really great advantages to it. In addition to the beta, I prefer a stock that's trending higher. And this isn't really doing it. But what's crazy about it is it's kind of going sideways and it still has that high beta. I love that because, you're not dealing with getting called out or having this. I would take assignment. I really don't want to get called out this thing. The other thing I love about it is this price. Now, normally when you're talking about a cash secured put, the very first thing that pops into a person's mind is how much money is it going to take? Well, you could do this for $1,600 if you sold a 16 strike price put, cash secured, a little bit less than 1,600 because you'd get that premium in there as well. So it's very affordable to put on a bunch of positions, one position, very flexible, being that it's only 1,600 or 1,900 or 2,000, whatever you want to do. You can do a lot of great cash secured puts here. And personally, I think this thing is going to have its day in the sun and really rip. It's a 2-time leveraged relative to Tesla. So if Tesla goes up 8%, this is going to go up 16%. Conversely, if Tesla goes down 50%, this will go down 100%. But that's part of the beta and part of the volatility, and it's a great price. So I'm long, just so everyone knows, I'm long a little bit of the stock. I've got the 1950 put sold, and I got the 23 call sold on some of my long position. So I'm all over this thing like stink on a monkey, both ways. I just am loving this thing.
Now, Jack, this is one that we've differed on opinion a little bit. Gap has been one I've made quite a bit of money on
Now
in the
we
last
got to
few months.
tell them how we differed on opinion. Is for folks that you don't know, his name is Dr. Professor, and he has a bunch of rules he follows on a pattern that he loves and has paid off well for him, and this fit all that pattern. And for me, it's got a too low of a beta, and it's not in a trend, and it's just too boring for me to deal with. But again, he can find a needle in a haystack, so he's been cashing in on this thing, where I just wouldn't have touched it, and it just goes to show how there's markets all over the place.
Yeah, this has been sideways for literally years. Literally years. And it showed up like after this rip right here and this pullback, sudden pullback, it showed up in my scans somewhere around May, right back in here. And I started pounding on this thing, selling puts down here at 1920. And I got put on this dip right here in July, August on quite a few positions. One of those positions I'm still in. And it rose up. I got called out on several. Dipped back. I got put some more. Rose up again. I got called out on several. But one of the positions I've still got 500 shares, and I'm up almost $5,000 on this baby. Selling
Nice.
premium. I keep selling, looking for this thing to pop into the low 30s. I keep selling that upside premium. Now, I was a little more aggressive on some of the other positions and sold closer to the money. And I made a smaller amount of money on some of those other positions. Now, for people that say, I see some of the questions like, I would rather not buy the shares, I'd just rather roll. This goes back to the biggest chunk of money you really kind of make on this, the fastest way, is when you get put those shares and they appreciate. That right there, that stock that made that pop right there, that was about 12 grand, almost 13 grand. That was Rocket Lab, RKLB.
This is something nobody talks about. You get put to shares, people think that's a bad sign. That's the number one fear people have when they sell a put. And here you're just showing them living proof that that can be the biggest gold mine in the game.
Now I got put those in July. We can look at the chart. And this one went really fast. Like I got put, it was like 2 or 3 weeks later, I was called out. I made like 12, 13 grand. And lots of people follow me. They're like, let's do it again. That's not the way this always works. I got lucky on that one. Everything worked really fast. Now, another one I did, and Jack, you were like, tell me I was playing with fire a little bit. Back here in September on earnings, I did Dollar Tree,
Mm.
DLTR. And at the time, Jack was poking a little fun at me. He's like, why in the world are you trading dollar stores? Like, that's not big tech. There's no AI. They're not going to have an AI run the dollar store or anything like that. And I got put those shares in here, somewhere in that September earnings. That's where I booked the profit on Dollar Tree. I was selling a 100 strike put over here, and it actually went past earnings for 2 weeks, maybe 3 weeks before I got put. And my cost basis was at 95 by the time I got put. Dollar Tree popped to 125 on the December expiration, and I had a 125 strike call sold against it. So I booked all that profit from 95 to 125. And I booked that last week. That's the big jump here in this chart. Was that almost $6,000 I booked on Dollar Tree.
Being gifted the stock, as we say.
And just in case you want to see it in here, it's right down in here, Dollar Tree, getting called out right there on the 19th. Bought it back here September, sold it up here in December. $5,000 booked on the shares, while I only booked another $200 on the calls I sold. Plus all the puts and stuff along the way, and extra calls along the way. So there you go. That's, to me, riding the shares on a nice little pop is how you get the biggest bang for the buck on some of these trades. And
Mhm.
to me, getting put the shares is getting put an asset that I can turn around into cash flow.
It's a gift.
Otherwise I'm using my cash as the asset, the cash flow. And there's a lot of things that happen if you're in a marginable account. When you get put shares, all of a sudden you have margin freed up. So you can do more trades. And I've used this as kind of a compounding effect. Now, I don't recommend, if you're new at this, I don't recommend you trade on margin. I don't recommend you borrow money. Full disclosure, I did borrow a large chunk of the money that I'm using to do this right here. I can't lose it, right? My back's against the wall. I can't lose this money. I have to turn it into cash flow and I have to profit and I have to pay back the money that I borrowed. I don't recommend people do that. It's been a long time, a lot of years trading before I was willing to borrow money and push hard and try to get myself unjammed. And there's a whole story to that, why I'm doing it. But it's, you got to be you. You got to own your decisions. I don't own, I don't owe any of this to anybody else. Jack, I don't ask you for trades. You don't really ask me for the trades. We talk about trades and we kind of do each other's trades if we like them.
Yeah.
But there's been plenty of times where you're like, I'm not touching that one.
Well,
And,
every trade you do has got to be your trade, even if you got the idea from somebody else. You got to own it.
yeah,
You got to take full responsibility for it. But I love what you're doing. I mean, you turned me on to so much. You turned me on to TSLL, and I'm on that thing like stink on a monkey.
what's like
What
this
else?
Nike one? You were like, I'm not touching that with a 10-foot pole.
Nah, I don't like Nike. Nope.
Let's just talk about this one real quick. Right here, Nike. Rewind back a week ago, the 18th, 2 weeks ago. Yeah, Jack and I were here on the show. I was like, I'm going to sell put on Nike. Earnings are coming up tomorrow.
I'm like, just give me the money.
I, I rolled in here at 59. I was like, if it drops to 59, I'm willing to buy it right there. I think that's going to be the bottom. And, Jack had some other obligations. He went on the show. I got put 59. We came back in the next week. I told him I was selling a 60 strike call against it for last Friday. And already that's profit, right? If I got called out, got put at 59, got paid for that, got paid to agree to sell it at 60. And lo and behold, last Friday, it popped up above 60 and I got called out and I'm out
Beautiful,
again.
beautiful, beautiful trading. That's that's a way to make money when the stock's not even going up. And that's another entirely new benefit you might see. I talked about that last year that if 2025 didn't shake out bullishly, we'd still have a great opportunity to make money every week selling options. And that's the only part of this that we have going. That's without the options market, none of this would exist. We'd have to be directional traders, and that's very hard. But look at
Now,
this. Cash flow all the way. It's a great case study what you've got here.
this is one of my patterns right here. This is a reversal pattern. Trend was down. We made a move up. We topped out. We came back down to this fib line right here. Found support there. Came down a little bit again. I was pretty confident. This doesn't always work, but it works more often than it doesn't for me. I was ready to, I was pretty convinced this is going to go higher. I'm still convinced this is going to go higher. And why am I not selling again right now? I don't have the free cash flow to do that at the moment. Plus, premium is weak this week.
It's terrible.
And you can see this IV chart right here. I would have to play out a couple weeks or months to really make meaningful money here. And I don't see the opportunity to cash flow this one right now. It's just not there for me this week. So I'm just waiting on Nike. I might go after it again here in a week or two if premium improves. Right now, I'm just waiting. I made money. I tend to make money and then quit. Just take a step back. I don't try to be greedy. I don't, I'm not like, ooh, that was good profit. Let's go again. Now Gap, I did go again and again, but it hadn't really done anything that was crazy. And I'm not putting new positions on right now because I'm closer to the target than I am to support.
Yeah, now there's a big difference there, with what I do too. When I'm doing credit spreads, I'll use the same stock for months and months and months as long as it's in the trend. When the trend is broken, then I'll bail. But I'll go back to the well, as I call it, on the same stock. Chris mentioned it's got to have weeklies. So, we want to sell these weeklies. And like if you sell the thing for 50 cents, for example, and it gets down to 5 cents in value and you've sold it for 50 cents, I would usually just buy it back and then sell it again another week out. So we keep rolling them, sell them for one price, buy them back at a lower price, sell another week's time out. Uh,
The
but yeah,
same day we were doing Nike, Jack pointed out this one right here.
I did more of this yesterday, just full transparency. So
I
more
I
puts.
had never looked at this until Jack brought it up. And I sat here and did my pattern. It's still drawn on the screen right here. Same pattern I was looking at on Nike.
Exactly.
I was the moment I brought this up, I got excited. I was like, "Ooh, that's my pattern. That's the reversal pattern." I sold, I think it was a 19 strike put. I can go look. I still have it. And I got 75 cents.
Wow. That'd be an 1825 cost basis, folks.
I sold that 19 for 75 cents right here on the show. I did it. We showed it off. I believe that was the 17th, if I remember correctly. And I still have it because it was for the 1-2 expiration. And I am too stingy to close this since it has nickel. They won't let me go with a bid lower than 5 cents because it has nickel strike, increments or whatever, or nickel bid increments. I want to close it, it's quoting me for a penny. If they're quoting a penny, I ought to be able to put an order in for a penny, but the broker will only accept a nickel. And there's no way I'm going to lose $4 on this thing.
Why would the broker only take a nickel?
I don't know. It's like I get that all the time. Like some brokers, some tickers won't quote less than a. It's like if you come in here and you try to, let's see if we can. If I try to quote
Can you put
0.303,
it in on a limit of
and
no?
then they'll say no bid prices or whatever, and yeah, even if I try to like Robinhood won't accept less than a nickel on it for a for an order
On fly or in anything?
on fly, just fly,
Oh, yeah.
and it just drives me a little crazy when that
Yeah,
happens.
I know. I'm doing this one too, just so you know. And then I got to give you a little update on Fermi.
So
The more I dig into this, the crazier it gets.
FIRMI.
So this is Rick Perry,
There we go.
former governor of Texas and Secretary of Energy.
Yeah, we were talking about this one yesterday.
Yeah.
Just to update everybody, this is a big project right here. They're going to build right here where we build all our nuclear warheads. They're trying to get this data center thing, AI data center, and use all this land around this nuclear warhead plant, build some nuclear plants and data center stuff, deploy it all right here. Supposedly they have 3 of the whatever they are, G1000 nuclear reactors on order from Westinghouse or AP1000 or whatever it is. AP1000, I guess it is. Now, their stock went public. It's supposed to be a real estate investment trust, but it's more like a SPAC.
Yeah.
And
Yeah. I sold the 750 puts that expire, I think, Friday. Or maybe the 9th. I'll have to check that out. This does not have weeklies, or it didn't have weeklies when I did it. But
yeah,
yeah,
still monthlies.
the
It's got
the this would be such a great stock to just trade if it wasn't going to be a REIT. That kind of killed it for me because now they're going to have to pay out like 92.5% of all revenue. So all REITs do is go sideways and they issue more stock to raise capital, right? if you
Yep.
look at Realty Income Corp, ticker symbol O, I mean, that's just going to be what it's going to be. It pays a dividend of 5% and just goes nowhere.
Yeah, so we just chop along, chop along, chop along. We
I
don't
was
really get any
hoping
capital
nothing.
appreciation. There's
No.
no real
And what
volatility. The
nothing.
options are very
No
thin.
options. And when they want to raise money, they issue more stock. So your equity in the company goes down every time they do another offering of stock to go buy more buildings to rent out. So REITs are good if you don't like price appreciation. You might as well buy a bond. But yeah, if this Fermi, I was hoping they were going to do things a little bit different. But if they're going to register as a REIT, then they're going to have to play by the REIT rules, and that's going to take. They won't have any money to do R&D or any of that stuff. They'll have to give it back out, and that'll kill the Fermi deal for me. But we'll see how the stock trades until they get rolling.
Yeah, so I was pointing that out to you yesterday. That it was a real estate investment trust, and I was like, those are not typically. So this is one of those lessons that you kind of learn along the way is that real estate investment trusts not typically good wheel candidates. Uh,
Terrible. Not a good candidate for everything, anything. Like Realty Income Corp, they call themselves the monthly dividend company. And yeah, they pay 5 and whatever%, but you're not going to get any. You could see the stock price drop by more than the dividend payment yield. So, if the stock goes down more than 5%, which it has, it's a yield trap.
yeah,
So
right
I don't want
there.
to lose my principal at the expense of some stupid dividend. I don't like REITs, man. I just don't. I don't care if they pay monthly, weekly, or daily. I'm not into them. Yeah, pipeline companies. Wreck-It Ralph says, I got all three of those. I got ET, EPD, KMI, and EDP. I'd much rather have ET, for example, with an 8% yield. Um, just plain old
E, e,
ET. Yeah. EPD, so I
EPD.
got that one too. Yeah, much rather have that. Have the if I'm going to get yield. And believe it or not, you can get a pretty good gain if you stick with these pipeline players for a while.
ET, Energy Transfer. Yeah, that was declining a little bit, but
Mm. I've been in it so long though, my cost is way, way, way down. And you keep rebuying it, you build up a big position. KMI.
yeah. So there's different stuff for everybody, and the question, where do we come up with some of these tickers? Like wasn't really trading TSLL until
Never.
I tipped him off on it that it was
Yep.
that
You tipped
the
me off on it.
one of the key things here though. Now this is also declined. This was trading 150 million shares a month, and now we're down to 89 right now.
It's wearing people out.
So yeah, we're
Right?
not
It's
moving, and
it's
people are
not
getting a
moving.
little bored on it. So Tesla right here been
Looks
trading.
much more bullish. That's the weird thing when you look at them like what you just did. This doesn't look the same.
Yeah, this one's trying to break out here. A little bit of a failed breakout, coming down to test support again. But right now it's trading 76 million shares. We were trading double the shares all September, October, November on TSLL. Double the shares that Tesla was trading daily. Now that's starting to wane just a little bit. People are getting fatigued. Where's the breakout? Why have we not run yet? So we're seeing a little bit of fatigue right here, and we're seeing that show up in the option prices too, that they've pulled back just a little bit from the juiciness that they were. And we talked about this for months, Jack, that starting back here in September when I was hitting it, and you got on it with me, this wasn't going to last forever. And
A miracle that it's
this could be coming
uh,
back, coming back to reality a little bit, that the premium is going to dry up. So you got to be careful.
now the premium should dry up just because of that price action right there. That's nothing. Okay, so that does not warrant a 3.31 beta, and it doesn't warrant the fat dividends we're getting out of fat premiums we're getting out of it. But this is now is my number one cash producer of all of them, of all everything I got. This took over IBIT, everything else.
Just because it's, not as awesome as it was in September, I still got paid $800 to sell 36 calls at 24.
Listen, I would do this. I'd do this one every day if I could. It's just
For
been
this
great.
Friday, 1-2, 1-2 on the 24 strike, which is way above, $4 up. I got paid $800 to do 36 contracts. You can do the math on what that is. But I collected $800 in premium. And that's a pretty good payday for the week. You'd be like,
It's a
wow,
great
that's
payday.
that's a lot. You're trading 3,600 shares right there. And my cost basis is like down here at like 15. Some of that's down here at like 4. Because I've been able to bring in so much freaking premium.
Nothing is bringing in that I know of, bringing in premium like this without crazy risk.
So even if this goes against me a little bit, I'm still sitting very nice on this right here. Very nice. And I have some TSLL in here that keeps recycling. Let's see, where's the last time I recycled some? It's in there somewhere. Should have closed. I'm not even seeing it. I guess it jumps to wherever I make the original order. Yeah, right there's some $66, 6 contracts. So I just have 6 contracts in this account. I've got like almost 5,000 shares in total that
Very
I keep
nice.
recycling weekly.
Hey, folks, if you like this show, tell your friends. We're on every day, 11:30.
11:30 every day. And Jack, I know you have this new hot thing you've been talking about. And we shared it yesterday. We're going to share it again today for those that are new here.
Cool. Yeah. I see Bo had a question, Bo Nix. Yeah, we're going to have an update on that, and I'm going to send you the rule that you need to follow on that too, so you're never wondering what to do. Love you guys too, Patricia. All right, Dennis. All right, there you are, Blake. All right, let him have it. This
That's
is one of the
me.
coolest trades ever. Now, why I came up with this trade that Blake's going to show you is because I did not have anything that took advantage of daily income. We do what you just saw here. We do this every week.